Okay, good morning and welcome everyone to the webinar on the future of SMSF licensing. A very topical issue at the moment facing the profession, not only for those accountants but also for auditors who are also just about to enter the licensing regime with ASIC as well. But today we're going to be focusing on in essence, what is the replacement of the accountant's exemption, and really what that means and what you as practitioners need to be thinking about now in terms of what you are going to do around providing advice to SMSF trustees into the future. Just from getting an understanding, I guess, from the people today, I'd just like to know if we just launch this poll, how many people are actually registered today. So if we just quickly launch this, I'd just love to know, is it just you or are you amongst a group of people? Just to get an understanding, like I said, we've had a fairly positive response rate and just look to get a feel for how many people are actually viewing today. So whilst we're doing this, I might quickly just introduce our guest speakers. We have with me today in the room here, I might start, Nick Hilton, who is the National Manager for MLC Accountant Solutions. And Nick is going to, I guess, really be discussing, as we work through today, some of the issues that he sees if you are considering an authorised representative pathway. And obviously MLC has been one of the early adopters in this space, and Nick will very much talk to some of the discussions he's been having within the industry and to those who are considering going down the authorised rep path. I also have on the line with me Liz Westover, who is the Head of Superannuation at the Institute of Chartered Accountants. Many of you would know Liz very well in terms of the work she does representing the Institute and being the voice of superannuation, and more specifically within the SMSF space. So to both of you, welcome, and just on behalf of myself and the SMSF Academy, I'd like to thank you for your support and giving up your time today. Good morning.
Thanks, Aaron, and good morning.
I'm just going to close this poll. So predominantly we've got people just listening by themselves. We've got a few that are in smaller groups as well. And that's great. So just wanted to get an idea of where we're at. So from a housekeeping perspective, before we get stuck into things, everyone online is muted, so feel free to talk amongst yourselves if you're within a group. As I've mentioned, the presentation slides you can access from the chat area. We have put a URL link there if you want to. We will provide you with a link after the session as well in the follow-up emails, so you have access to the slides for you to go back and review. We do encourage you to type questions to us as presenters. The idea today is to provide you with as much information as possible. I've already worded up our guest panelists that they're happy to answer all the tough questions, and if we don't, the idea is to try and flesh some of these things out whilst we work into this new regime. And obviously this session today is being recorded and we will be uploading this session and making it available for people to listen to at some point in the future. So obviously, just to put a disclaimer up front, most of us in the profession know how this works. So what we're doing today is obviously only covering general advice, and the discussion today obviously is a representation of what we believe is the facts around the regulations as they stand today. So just be aware of that. I've really discussed and introduced our speakers. Again, my name is Aaron Dunn, and I'm the Managing Director of the SMSF Academy, and we look forward to, with Liz and Nick, providing some fairly interactive and robust discussion today. Okay, so I guess, Liz, I might actually start with you if possible, and get you to just start the conversation around where we are today. And I guess when we look at what the Financial Services Reform Act, nearly a decade ago now, isn't it? So looked at I guess we're specifically only looking at one area when we look at what the change is happening here. So predominantly a whole range of other things that already sit within the Corporations Act will stand and continue to apply. Do you just want to maybe provide some comments around, I guess, some of these activities, and in particular what 7.1.29a was intended to do?
Sure. I guess 7.1.29a, it quite literally is, and a lot of people don't quite understand exactly what it means, is the ability of recognised accountants, so that's members of the Institute, CPA Australia and Institute of Public Accountants. So members of those recognised accountants able to recommend the setup and closure of a self-managed superannuation fund without having to hold an Australian Financial Services licence.
Yep.
So that's pretty much all it is.
Yep.
Some of those other measures there that you've got on the slide are referring to other services that accountants might typically offer,
Yep.
and they were never really intended to come into the AFSL regime. So that's around tax advice, for example.
Yep. Yeah, and I guess it got to, and I think, and you can probably talk on behalf of the Institute here, I guess that the struggles that the industry has generally had with the application of how 7.1.29a worked, and the fact that I guess ultimately everyone concluded that the way it was framed up wasn't actually having the intended outcome in which everyone was hoping for it to do, and hence why we're here today.
Yeah, look, I think it's always been important for accountants to be able to talk about self-managed superannuation funds and certainly make a recommendation about their setup, particularly when you're talking to someone about their business structuring arrangements.
Yep.
SMSFs have always been a very viable alternative to company structures, trust structures, so you needed to be able to talk to them and make comparisons and work out what is the best structure for your client. So it was important that accountants were able to talk about that one. What we found, though, was it was then it was too restrictive. So it didn't actually enable accountants to talk about what the alternatives to a self-managed superannuation fund were. So that might be an industry fund or a retail fund. And strangely enough, it didn't actually give them the ability to make a suggestion that an SMSF was not appropriate for somebody.
Yep.
So it was too restrictive in nature, didn't allow us to talk about what the alternatives were. So we've actually always been quite supportive of the removal of the accountant's exemption, but we needed to make sure that we came up with an appropriate replacement.
Yep. Okay. So I guess that then leads on to now, I guess, what the impact of this is going to mean. So I might get you, Liz, to then carry on with this and talk about what now these draft regulations actually mean when it comes to what an accountant may be able to do under what's being referred to as this restricted licence. And I guess also for you to comment on why the Institute and CPA Australia in particular took a very very pointed approach in respect to where it was heading with the Minister. Those online may or may not be aware of, I guess, the some of the advertising that was taken out last year through the Financial Review, for example, and really, I guess, took really, I guess what's the word I'm after, took a very targeted approach to trying to get some change, which is ultimately where we've landed as well. So I might get you to comment, I guess, both on what we will now be allowed to do, but also what the Institute did and the reasons behind why they did what they did.
Okay. Nick, you're not going to get a word in. I'm sorry about that. You've given me a lot to talk about there, Aaron.
Yeah.
Look, I think the important thing is a professional association like the Institute operates in the best interest of the public. We are a public interest entity. That's our raison d'etre, if you like. We believed it was very, very important for accountants, the trusted advisors, to be able to talk to their clients about a range of issues. We believe that the future financial advice reforms would not reach one of their prime objectives, which is around increasing access to advice, if accountants weren't able to play a role in the provision of that advice. So we really believe that this was an important issue, and we had to fight for it. Because we truly believed it was in the public interest to make sure that people could talk to their trusted advisor on a range of issues.
Mm-hmm.
And that's pretty much where we've landed with it. So with this new restricted licence, and you referred to it as an SMSF licence, which is a little misleading, Aaron, in some ways, because this new restricted licence goes far beyond superannuation and self-managed superannuation funds. And what it will enable accountants to do is to talk to their clients and make recommendations around classes of products.
Yep.
So it doesn't allow accountants to give specific product advice, but it does allow them to talk about a range of classes of products. There are 5 main groups that are coming in under those classes of products. The first one is superannuation.
Yep.
Second one is securities, simple managed investment schemes, general insurance, and basic deposit products.
Yep.
So it does give a good broad range of good scope of advice that accountants will be able to give under this new regime.
Yep. So Nick, to you then, I guess, having been at the coalface of this for some time, have you got any comments around, I guess, where you saw the licences, the way it was sort of heading at one stage, and the discussions I know that MLC had, and where you sort of think it has fallen now?
Yeah, I think it's resulted in a fantastic outcome in that there will be, absolutely from a consumer's point of view, the availability of more advice providers, if you like.
Yeah.
And importantly, I do agree with Liz's comments that the workings and the mechanics of the exemption in relation to SMSF didn't work, and it didn't work for a number of practical reasons. Obviously, the ones that Liz has raised, and also in relation to perhaps how you deal with rolling over old or existing super funds into your self-managed super funds to get a reasonable balance. So what was in place wasn't really practical. It's probably fair to say that I think it was probably widely misunderstood in terms of what people could and couldn't do under the exemption. I suspect there's probably a few people that have accidentally kind of gone beyond a little bit what they were supposed to. So I think that this new licensing regime provides all the necessary scope that accountants need to adequately service their clients in the way that they want. And importantly, it'll be kind of a line in the sand and a clear definition of what can and can't be done.
Yep. And I think, Liz, you raised a valid point. I know Nick and I were discussing earlier. I think in a lot of instances the discussion that we have in the industry gets lost around the benefits ultimately of why this is being done for consumers.
Correct, yeah.
So, I know the Institute and the CPA's pushed really hard with that, and I guess we as practitioners get caught up in, well, is it really the right outcome for me? The reality is the government's worried about the improvement to obtain access to financial advice, and see the role in which a appropriately skilled and licensed accountant can actually help facilitate that. So I tend to agree that the way that it is now will hopefully go a fair way to achieving what those objectives are. Yep.
Yeah,
all right.
I think one of the other important things too is some people have asked the question, well, why did accountants not just go and get the full AFSL?
Yep.
And that's a fair enough question. In fact, a lot of accounting firms actually did that. They did go and get the full AFSL. But the reality was that the requirements under a full AFSL would have been totally unavailable to a large number of sole practitioners.
Yes.
So they would never have been able to achieve an AFSL even if they wanted to.
Yep.
And the other important factor is independence. A lot of firms simply want their independence away from product providers and away from product advice.
Yep.
They didn't want to go into that type of advice, and they wanted an environment, I guess, where they could give this sort of class of product and make some recommendations to their clients, but without necessarily going down that product path.
Yep. Very good. So I guess just to put it in a timeline here, I just wanted to sort of outline some key dates that everyone as practitioners, I guess, just need to be aware of. So I guess today we have the existing Corps Law Regulation 7.1.29a, which gives that current exemption, Liz, as you've already mentioned, for advice around or recommendation around the establishment and winding up of an SMSF by what is a recognised accountant. We then have from 1 July 2013 the fact that individuals who meet certain criteria will be able to apply for what will be known as this sort of restricted AFSL, and I guess we're going to see this concept come in around an exempt licensee and the definition of who can qualify for that, and that exempt licensee status will be around in essence for a maximum of no more than 6 years. It will allow for, as Liz rightly stated, a broad class of product which will include advice in respect to self-managed super funds, but to a whole range of other things. We also need to understand, though, that there is a requirement to also comply with a range of things that are coming out of the Future of Financial Advice reforms, in particular the requirement to comply with what is known as the best interest duty as well. The next date, I guess, that comes along will be 1 July 2016, which is when we are going to see the current, what we'll call the accountant's replacement or the accountant's exemption will be repealed. So from that point in time, to be able to provide advice on the establishment and winding up, we'll need to fit under an authorised rep status or the restricted AFSL. So, and the previous day, I guess, then becomes the last day that you can become or apply to become an exempt licensee, in which you have 3 years in which to demonstrate that competency. And finally, we have a 1 July 19 date, which this exempt licensee regulation would be repealed, and there would be a full obligation that would apply to all licensees, whether it's done under a restricted or full AFSL. Now, I might just ask the two of you to provide some comments around that, if you have any, just in terms of what you interpret that means. So, Nick, I might start with you there if you've got anything you want to add.
So certainly obviously a transition period has been provided, which I think is only reasonable given there is things to do. And I guess from experience, I'd highlight to people that while there is a transition period that seems like a reasonable amount of time, there is a number of things that need to be dealt with as part of your transition into this new regime.
Yep.
And we've kind of summarise them as, you've got to get yourself ready via education. If there's gaps there that you need, you've got to get your businesses ready, so you've got to develop your processes or amend your processes that allow you to then deliver the advice to the clients, and that involves developing SOA templates, FSGs, all those kinds of things, and then going to that next step of actually getting in the practice of delivering this advice to your clients and becoming efficient at it, so that it doesn't cost you or your clients a whole lot of money to be able to deliver.
And Liz, do you have any comments around the timelines and from that point of view?
Look, I agree with what Nick said. We do have a transition period. You don't want to be waiting until the last minute to be making any decisions, but conversely too, you don't want to be pressured into doing anything in a hurry. We do have time, and I think practitioners, first and foremost, they have to decide what sort of services that they actually want to offer to their clients. Decide how they want to provide those services and the impact of certain options on their practices. Now, for a lot of people, they will make the decision to go down and get their own restricted licence. Others will make the decision to go with a dealer group. Some practitioners will make the decision not to operate in this regime at all. For example, if they're only offering tax services, they won't need to be licensed. So practitioners really need to do an analysis of the type of services they offer, how they want to operate, look at what all their options are, talk to as many people as they can, do their research, and then make a decision that's right for them, their practices, and their clients.
Yep, absolutely. And I guess just with this one here, just again, just a similar slide to previous, but I guess what this is really showing is what the requirement is going to be. So if we look at the blue areas, from 1 July 13 anywhere through to ultimately 1 July 2019, we're going to see this 6-year window that will apply to those who hold a public practice certificate, who wish to operate under the restricted AFSL, and within that period of time they're going to need to show competency to be able to then hold what would be a revised restricted form, I guess you'd call it, from that closure of that 3-year period. So either it will be from 1 July 16 at the earliest, or as late as 1 July 2019. And Liz, I might just get you to quickly comment on what that difference is and why we have this restricted licence. And I guess what I'm referring to there is that ability or that requirement not to hold money, and what that means in terms of the ongoing compliance requirements.
I think what you're asking there, Aaron, is what are the differences in terms of
Yes, correct.
A license and a full license? Yeah,
yep.
Okay. So it was one of the important points for us when we were discussing what this would mean for accountants, is to get some practical outcomes for accountants if they're going to come in under this regime. And one of them was around the need for an AFSL audit. And we believe that under this restricted licensing regime that it really should be more along this compliance certificate, that a full-blown audit would not actually be required. One of those audits is around provision of product, and that obviously that was not applicable to this restricted licensing regime.
Yep.
I'm not sure if Nick's got anything to add there. I think that's what you were asking. Yeah,
pretty much. So I guess just the fact that there is a version, I guess, where those that really wish to focus on the strategic advice, I guess this is what it's identified, that there is a solution really available for there, as opposed to, I guess, those that really want to, or have traditionally with financial planning and investment services, take on the holding of money and that additional obligation. So, Nick, have you got any other comments you want to add?
I mean, as far as I understand, there was, obviously this is one of the key differences that's being adequately negotiated from the accounting body's point of view, to make the ongoing cost and management of having a license a little bit cheaper.
Yeah.
I think that there was also talk potentially around some lower PI obligations, but I don't know where they ended up. I certainly know that the audit requirement is one of the things that's looking at being relaxed. Yeah.
Yep. Okay.
One of the other big differences as well was relevant experience for your responsible manager.
Yep.
Under a full AFSL, a sole practitioner, for example, would never have been able to satisfy the ASIC requirements for relevant experience.
Yep.
What we've been able to talk to the government about is recognising the certificate of public practice that recognised accountants hold, and that will satisfy the relevant experience for your responsible manager under the transitional arrangement under this new regime.
Yep, and that's where
which is really important.
Yep, yeah, Liz, that's what I was going to say, that's the important ingredient in that slide that I've got up here, that holding that public practice certificate allows you that 3-year period within that 6-year window to demonstrate that competency based on what would be required moving forward.
Yeah,
absolutely.
And look, that certificate of public practice is an important piece, and it does recognise basically the experience that accountants already bring to the table and the types of services that they offer their clients. So it is an important piece, and we certainly encourage any other recognition of certificate of public practice would be able to demonstrate a similar robust system to what the professional accounting bodies are able to bring to the table.
Yep, yeah, based on what their obligations are in holding a certificate of public practice.
That's correct.
Yep. Yeah. Yep. So PI and all the box and dice that actually goes with that.
Well, it's all of our members who hold a certificate of public practice are subject to our quality review regime, which we're very open and transparent about. We have a professional conduct team that deals with anybody that's not meeting their professional obligations. They have to do certain courses to be able to get the certificate of public practice.
Yep.
Obviously, there is the PI implications as well, and that's on top of being a chartered accountant in the first instance.
Yeah. Yep. Absolutely. I think we've probably covered this, so I guess I might just quickly go through it and move on. But I guess who can apply to be an exempt licensee? Liz obviously raised it earlier, the accountants who hold a public practice certificate from one of the professional bodies. There has been some discussion that SPA may also, in terms of their public practice certificate, that they're looking to prepare will also apply, but that is unresolved at this stage. I guess there are, or potentially there's scope for people who may have some form of full licence, may wish to fall back into this if that's what their desires are and they've been able to demonstrate that level of competency. So I guess now I want to move to the options that are available, and this is really where we'll have some discussion with Nick and Liz about the differences in making or becoming maybe an authorised representative, or whether you go down the restricted AFSL path. So the first thing I want to do here is just ask the question, when are you thinking about becoming licensed to provide SMSF advice? So we're just wanting to sort of find out, to say, well, is it something that's top of mind right now, or is it something that you are ready to go and really thinking about this to maximise the opportunity? So what we'll just do is we'll leave this open for about a minute, because I think this is, from an industry perspective, I guess everyone, both to you, Nick and Liz, are very interested as to what we're seeing. And I guess, Nick, whilst this poll's open, you being out in the marketplace, I guess what are some of the discussions that people have been having with you?
Look, I'm not sure I want to make comment directly now, given I might influence the polls, but I don't think it will. It's quite surprising they're all coming up in the first kind of, what's that, first year or two?
Yep.
First year. Look, I mean, the comments and the conversations we're having with people out in the market are probably not going to be too dissimilar to this poll that's just finished.
Yep.
Certainly, we're seeing that accountants are perhaps more inclined to move early into the new regime, and there's a couple of reasons for that. You know, one, obviously, that there's certainly an acknowledgement that this is not something that you can just do overnight. It will take a little bit of time to get done, and there's those kind of three stages that I kind of talk through to give people a sense that, you know, it does take time to do this. You know, if you were starting from day one and trying to do everything as quickly as possible, you could probably do it in 6 months. However, you've also got to run your own business at the same time. So it actually means that you can only spend your kind of slower periods doing this kind of activity. So it will take a little bit longer. You know, obviously some of the other benefits, though, are that, you know, certainly the accountants are viewing it as providing a competitive advantage. You know, there is, you know, obviously there's numbers being thrown around about how many will get licensed, and the ballpark numbers around the 10,000 odd. You know, that probably represents about a quarter of the actual public practitioners out in the market. So it's really saying that a quarter of the population of public practitioners will be able to have a much broader conversation with their clients,
yep,
and therefore an opportunity to specialise.
Yep.
So a number of them are seeing this is a great opportunity to actually offer that competitive advantage over what they are, you know, their peers, and offer more services to their clients, as well as controlling that client relationship.
Yep.
Obviously they can charge for the advice, which is perhaps something that will be a little bit newer to them, because in many instances they just charge for the implementation of the SMSF rather than the actual advice around the reasons for establishment.
Yep.
And it also, moving into the new world, does remove, in some ways, some of that greyness that existed around, you know, whether they were overstepping the mark beyond the exemption. So, you know, it'll mean that they can legally provide the advice, and I think even more importantly, have appropriate PI that covers them.
Yeah,
because,
the risk issue. Yep.
You know, the downside issue of stepping over the accountant's exemption, in my mind, is not necessarily that ASIC's going to knock on your door and find you. It's just that, you know, which is obviously an issue, but yeah, it's more that if something goes wrong with your client and your PI provider doesn't want to actually compensate the arrangement, that becomes more of the problem.
Yeah. And Liz, would it be a fair comment? I've got the poll results up there at the moment. You know, the discussions you're having with your members, you know, are we seeing a real greater move to specialisation, and that's why we will see a range of early adopters? I mean, I know the Institute, for example, in the last 12 months or so, I think it is, maybe a bit more, with the CA SMSF specialisation. Do these results that are up on the screen surprise you, or is it sort of consistent with the discussions that you've been having?
Oh, look, I think the thing about this new regime is we've been talking about it for a couple of years now.
Yeah.
So a lot of people have been following the commentary around it, and they're broadly aware of what their options might be. So it doesn't surprise me in some respects that there are a certain number of people who are ready to make that decision from fairly close to 1st July.
Yep.
I guess the only comment I make about that is that we still only have draft regulations.
Correct.
And we need to get that locked and loaded. That would be my advice, is to make sure that people actually know what it is they're signing up for, or what decision they have made for one way or another.
Yep.
But I certainly agree with Nick's comment also, is that a lot of people are just looking for the clarity and the certainty about what and how they provide advice. So the sooner they get into that regime and make the decision, they can get on to their running their businesses and having made the decision about how they operate.
Yeah, sorry, go on, Liz.
I was just going to talk about the specialisation. Certainly the Institute has launched its CA/SMSF specialisation, which is going very well.
Yep.
This accountant's exempt, or the replacement for the accountant's exemption, does go beyond SMSF, so, and I think that's the distinction that we need to make.
Yep.
So from my point of view, with people going into this restricted licensing regime, is that you certainly need to educate yourself appropriately, no doubt about that one. And you need to recognise that there's specialists out there who really know their stuff around self-managed superannuation funds. So it's going to be very important for people to have their referral networks in place to make sure that when they come across an issue and they need to refer it off to a specialist, that they do so.
Yeah.
And that's not just specialists, that could be a lawyer, it could be financial advisors around giving specific product advice. Referral networks are going to be very, very important.
Yep, absolutely. So I guess moving on then to, what some of these options will really be, and this is really just a summary page, and then we'll move into, some of the discussion. But obviously we have the path around self-licensing and the fact that we will see a range of public practitioners move into that restricted AFSL. To the point around a full licensing model, arguably we have seen, some people move into that already. We're not going to see that really come into play at this stage. And then what we're seeing in the marketplace in general, and Nick with MLC is just one example, is these different tiers of authority that will actually apply. And Nick, what I might get you to quickly comment on is to distinguish between some of those, and then really get into, well, what does it really mean to become an authorised representative then?
Sure, okay. So in terms of the levels of authority, I think you could argue them as various scopes. So what we know from our kind of research and the conversations with the accountants in the market, some of which we already have quite strong relationships with through our existing MLC businesses or our aligned businesses, or alternatively through the NAB Business Bank. So we've got a lot of relationships already. So from those kind of conversations, we know that in essence, a lot of the accountants have wanted choice in relation to the level of advice that they'd want to be able to provide their clients. And I think we're going to talk a little bit about the decision-making process. So I'll leave that to a later date. So what we've developed is 3 levels of licensing solution, which can be broadly summarised as a basic solution that will really allow accountants to move into and continue providing advice in relation to self-managed super funds. That in effect, I guess, addresses all the issues with the exemption. So it is much broader than what the exemption allows you to do. And then our second level of authority, which is more that strategic level authority, which is really designed to mirror the licensing regime that's offered by ASIC, in that you can have class of products or general strategic advice in relation to a number of financial products. And then our third level, which is perhaps a traditional license that we would offer, or a traditional authority, I should say, that we would offer those advice providers that want to provide the strategic advice as well as the specific product recommendations, because we do see that accountants do want to provide those various levels of licensing solution. In many instances, accountants have been contemplating moving into the financial advice world for a number of years, and this is turning out to be a catalyst to actually get them to make that decision sooner rather than later. So in terms of the specifics around what it means to become an authorised representative, obviously, at this stage we're relying on the fact that we've got to work in the current regime. So, we're talking to people about developing or getting their own RG 146 qualifications up and running. There's a number of solutions that we have, obviously, for that. Otherwise, as an authorised representative, we, the licensee, are ultimately responsible for the advice that you provide, and therefore we have a set of standards that need to be met. They're basically standards that define how you need to operate within the licensing regime, so they're largely compliance-based, and then obviously we have CPD arrangements, etc. And then obviously there's other things like obviously it's a $1 fee for getting access to that licence, which we think is going to be competitive to getting your own licence. And obviously we provide all the necessary support services to get you up and running and moving into the world. All this new world.
So I guess the obvious question that people sort of ask is well, we go down a path of becoming an authorised representative. What am I as an authorised rep going to be imposed on by the licensee? We're talking about the fact that this is a strategic advice piece. So is there any obligations that fit around that, or is it this? I guess why is MLC and AMPs of this world trying to get into this space and see that as an opportunity for them and to attract the accounting profession?
Look, it's a fair question, and it's not one that we don't often get, I can assure you. So, I mean, the question around independence, which Liz alluded to as well. Look, I can understand the perception there, but I would certainly say that it is a perception. And it'll provide a bit of clarity as to what I mean by that. So I talked about our 2 levels of licensing solutions, and in those solutions they don't actually allow you to talk about financial products other than self-managed super funds. So, and they are on a flat fee structure. That is, you pay a service fee to us for the access to the license. There is no sales targets or any obligations or anything like that. So from those levels 1 and 2, there is no kind of capacity to actually potentially make yourself financial products. And in fact, to be honest, if it's level 1 and level 2, you'd actually have a compliance issue if you started recommending financial products, because it's not in line with the scope of the authority that you've been issued. In terms of level 3, obviously that is more akin to our traditional kind of authorisation, which does allow the strategic advice and the product-related recommendations. But even the advisors and the accountants that are fully authorised with a full authority under our licences, they don't have sales processes. They operate on a flat fee structure. There is no kind of revenue sharing or revenue splits. In terms of an approved product list, which they are able to advise on, there's hundreds of products on there. In terms of providers, there's over 40 different product providers. MLC is one, and NAB is another, and obviously there's another over 38 other ones that are actually on that list. So, and there's no obligation for us to be able to compel people to use our product. Obviously, our preference would be for them to do that, but we can't make people do it.
So the question to you then is well, why get in this space? Is the comment then that naturally over time you hope to see people move, once they move into a licensing regime, that as they start to open up services to the public around this stuff, that they may progress into a full license arrangement?
Yeah, look, I mean, there's a number of reasons as to why we're kind of going down this space. I think first and foremost, between our 500 or 600 odd businesses that are aligned to us, over a quarter of those actually operate accounting and financial planning businesses. Obviously, our relationship and licensing currently is on the planning side, and we have to develop a solution for the accounting side of those businesses. Otherwise, we're not adequately servicing the businesses that have relationships with us. I think it's also fair to say, though, that if there's 10,000 new advice providers out in the market, you're talking about the market growing from the 17,000 odd financial planners to 27,000 financial planners over the space of 3 years, where it hasn't actually grown in any way, shape or form. So, it'd be remiss for us as a large institution not to actually have an offer out into this market, because if there are those advice providers out there, we would want to be able to partner with them.
Yep, absolutely. So I guess, Liz, to you then, I might flick over here. Then what are the issues that will confront the public practitioner looking to hold their own licence? Maybe I'll get you to sort of pass some comment around what is going to be involved in that, and then again what the Institute as a member body is going to look to do to support its members around the pathway that they may take to be holding this restricted AFSL?
Sure. Look, I think the biggest problem for us at the moment is that we still haven't had finalisation of the regulation.
Yep.
So we just haven't got enough clarity on this one, and that makes it very difficult for people to be making decisions.
Yep.
And certainly in terms of what with costs, you know, before we've seen the finalisation, and there may be some changes involved. Certainly, I'd just encourage people to go and talk to people like Nick and find out. Certainly, do all your research on what holding or being an authorised rep of an organisation like MLC would actually mean for you and your practice and the types of advice you can do. There are some issues that still need some resolution. Professional indemnity is one of them.
Yep.
Under the current limited liability scheme, financial services are not covered, so we still need to work through what that actually means and how that will impact on accountants under this new restricted licensing regime. So there's still some ifs, ands and buts there.
Yep.
Registration costs. You will need to be belong to an external dispute resolution scheme. What does that actually mean under this restricted licensing regime? What are the implications there? We still don't know a lot of the answers to a lot of these questions, and that's the difficulty. Yep. So I guess that's sort of why I'm sort of suggesting to people that they not rush into making a decision until we have some finalisation about this and they can fully assess what it will mean for them and the costs associated for them.
Yep, and I think predominantly being a significant number of accountants on here, I guess that's part of the challenge. Once we have some of these costs really lined up, that's when people need to be making the decisions as to what they're going to be doing with their business around this, because you know, the numbers of clients and the costs and stuff that may be associated with one path or a different path may ultimately, you know, decide the outcomes and the way in which they want to really operate. So, yep, absolutely.
Well, we still don't even know exactly what the training will involve.
Yep. Yeah, correct.
We understand it will be some form of RG146 training, but we don't know exactly what that's going to look like yet.
Yep, and when you see the ASIC, I think we're about to say the same thing.
Yeah, ASIC and doing the review of RG146, absolutely. So yep. It's sort of a bit up in the air in there, which makes it difficult for some people to make decisions.
Yeah, absolutely. So I guess one of the other things here is then, well, what I'm referring to as these moving parts. And I guess, Nick, when you look at a large institution like an MLC or a NAB or something, you know, these moving parts, I guess, are all sort of bundled in, in terms of the technical support and potentially the statements of advice and that sort of stuff. Are these the sorts of things that, I guess, that are attractive, I guess, in an offer that an MLC would have?
Look, I think, you know, obviously, in terms of the decision-making process, there's a range of things you need to go through in terms of determining whether it's going to be right for your business, well, importantly right for your clients, in that do you want to deliver this advice to your clients, and if you do, are you going to do it within your practice or are you going to outsource it? If you're going to do it in-house, you know, are you going to leave it at SMSF or broad strategy or comprehensive? And then, you know, once you've kind of made those decisions, then it's about, do you need to go and get a license from ASIC or get an authorisation from a provider? I mean, I think in terms of talking about the providers versus licenses, I mean, I certainly think that our solutions will end up being cheaper, but I take Liz's comments that, you know, some of those things need to be defined. I'll also go to the point of saying, look, between the larger players in the market, I certainly believe that the licensing solution in its own right, that is the certificate, if you like, that allows you to go and have a conversation with a client about, you know, SMSFs and general financial products, will be a commodity. You know, it is not a clear differentiator. It is the same kind of license that, as long as you have a reasonable amount of scale, you can get and deliver quite efficiently.
Yep.
So then it does become, you know, what are the value adds that you can get as part of that licensing fee that will actually provide your business with perhaps an advantage in how you deliver your services to your clients. So, you know, really, you know, our mandate is all about trying to drive efficiencies into the businesses that we actually work with, because if they are, you know, delivering those services more efficiently, then they are actually, you know, adding more, you know, money in their own bottom line, or importantly, perhaps lowering the cost of the service to the client. So, from those kinds of things, that's what we try and do. Now, what does that involve? Obviously, it's about delivering the necessary templates and advice documents that are needed to get yourself up and running, obviously and quickly as painlessly as possible, but then ongoing, there's technical resources that we have available, research and other services that are really about making sure that this is a much better than just a certificate proposition. And one of the obviously things is, there is CPD requirements, which no doubt everyone's currently looking to meet, and part of our offer generally includes practice development, which is kind of at no additional cost, and all those kinds of things. So it is about trying to make this as easy and as painless as possible.
And then Liz, I guess just your views or in terms of what the Institute is looking to do around the support for its members. Can you sort of share any insights in respect to the way that the professional bodies might be looking to support its members in that regard?
Sure. Look, there's no doubt the Institute's certainly been disseminating a lot of information to its members and will continue to do so. So I do encourage any of our members that are on the phone on the webinar at the moment to open up your emails and go to our website. There's a lot of information on there that you do need to know and that you should know. And we'll certainly keep members up to date as new developments unfold, get some legislation or some regulations locked and loaded. Yeah. We will be looking to support our members through this new regime. We want them to understand the new regime and certainly help them navigate their way through the decision-making processes, and ultimately, if they choose to go down that licensing path, we'll be assisting them and supporting them, providing resources for them as they go through that process.
Yeah. Okay. Thank you. And then I guess we've really discussed, I guess, a lot of what the training requirements are here. Obviously, there's an obligation to meet the relevant training requirements that are currently prescribed in Regulatory Guidance 146, and also in terms of applying for a licence, RG 105, which is really replicating those requirements there. I guess there will be an obligation to ensure that there's appropriate skills and knowledge, and I guess different authorisations when it comes to different dealer groups and stuff will impose different requirements. So you, I guess, need to be aware of those bits and pieces when, or if you are looking at the authorised rep status. And just, I think Liz mentioned it before, the ASIC training register is currently under review. So anyone looking to these things, I guess, needs to be talking to those providers, because ultimately ASIC is awaiting, I guess, a final policy position, in particular around FOFA and also on what is called Consultation Paper 153. So I guess why start to be ready earlier rather than later? And I guess what I'd really like to hear from both Nick and Liz, I might start with you, is what's the opportunity and what's the message that's really being delivered out there as to why public practitioners need to be thinking about moving into this licensing regime? There's the way in which accounting practices are being run are changing in terms of the levels of compliance activities to advisory activities. What's the message, I guess, that you'd like to convey today to those attending the webinar as to the opportunity to move into this licensing regime?
Look, I think the biggest opportunity here is just this new scope of advice that accountants are going to be able to offer, and it's the first time we've ever really had any sort of clarity and consistency in legislation that sort of backs the type of advice that accountants should be able to provide to their clients. And certainly to make some recommendations around securities and deposit products and those types of things. Certainly remember my experience in public practice was having to cut short some conversations, and if I had $1 for every time some of my clients would say, Liz, I know you can't give financial advice, but...
Yeah, if it was you, what would you do?
The conversation. Yeah, exactly. So I think we can start moving away from some of those, or we can actually have those conversations now. I think our clients will understand the line around specific product advice, and this is just around broad conversations. Certainly I know most people have had a client that would have had vast amounts of money sitting in a cheque account So to be able to make a recommendation now that they go and perhaps get a term deposit or do something more proactive with that amount of money is a significantly positive outcome for accountants, but more importantly, their clients.
Yeah.
So clients will be able to get that advice and a greater range of advice from their trusted advisor.
Yeah. Yeah.
Big component of this new regime.
Yeah. And Nick, the opportunities, I guess, that you see?
Oh, look, I think undoubtedly, you know, we did a roadshow, I think latter half of last year, where we asked about 400 odd of the attendees, you know, what they thought of this, and you know, about 70% said it was a positive. And I think that the key driver of the positive opportunity is that, you know, there's likely to be this emergence of this SMSF specialist. The costs of having a license, which will be an additional cost, only makes sense when you've got enough scale in terms of SMSS as an example to be able to justify it. So you will see this move perhaps to more of the specialisation, whole practices or divisions within practices. And you know, it's certainly an opportunity for accountants to continue to benefit off the growth in the superannuation industry and more specifically the growth in the SMSF sector, which, you know, certainly from our research is not expecting to slow down anytime soon. You know, and obviously in relation to, you know, why they'd want to move early, as the things I've talked about before, is that, you know, it does take time to deliver this solution and get it running. So it will provide with a competitive advantage, but you need to actually move into the regime to be able to.
And I think I think you raised it there, Nick, that the growth of the sector is such that, and the nature of the types of trustees, and in particular the growth in the self-directed nature of trustees, will suggest that this is an enormous opportunity to move into. That we are seeing a far more competitive environment within the SMSF space, so the need for appropriate levels of skills to be able to deal in that, but complemented with an appropriate and robust licensing framework, I think is quite critical, and it allows the public practitioner maybe to move away from those compliance-focused activities into more a holistic offering and that strategic advice if that's what they want to do. So I've just put up there at the moment a quick poll, again, just to ask the question, which path you may be looking to take at this stage. So I might just leave that open for a minute more. But ultimately, you know, I think this, and those people that are on here today would understand that this does provide the opportunity, and once we get some final regulations around this, a lot of people will really start to move forward in terms of getting into this new licensing regime and capture what the opportunities actually present. So I might just quickly close that off there. We still do have nearly half who are unsure at this stage, so which is interesting. So again, I guess what this really suggests is that there is a real need for constant communication in terms of what you need to be thinking about, and really disseminating the information that you're getting through the professional bodies, but also more generally into the marketplace through the media and through the likes of the MLCs and so forth. And finally, I guess something that has been very much a part of my last 12 months in particular with the SMSF Academy has been putting together a solution in respect to the ability to provide advice around SMSFs, and today we're launching our SMSF 101, which we believe is the first truly online solution around SMSF education. And the SMSF Academy has done this in conjunction with leading online financial education specialists, Money 101. In terms of what we will be delivering, we have a course that will be launched towards the end of next week that will have 11 modules. 2 of those will be in respect to the RG 146 knowledge requirements and also around the advisor skills. We're referring those as A and B, and then we have 9 specialist SMSF modules that really provide a pathway towards SMSF specialisation, and you can see those outlined there. On the right-hand side, we have just an example screen, but the idea is this will provide a pathway for people to actually attain specialisation. As a course, it has achieved 49 SPA CPD points, and individually they have all attained somewhere between 3 and 7 SPA CPD points as well. So this can be purchased as a course. They also can be purchased as individual modules. So you do have the ability to, I guess, have a look at these and work out, I guess, whether you need specific skill gaps or whether you wish to undertake the course. Most importantly, it is truly delivered online and allows you to work through this, whether it's on a PC or also through tablets, iPads, Android tablets, and so forth. So you can register your interest. We do have a specific landing page at the moment, smsf101.com.au, and you can register your interest there and also get access to our sample module, which we will forward through to you. Again, we believe this is a truly exciting initiative and will redefine the way in which we believe SMSF education and training is currently offered. In terms of the SMSF Academy's next webinar, which we will be branding under our SMSF 101 umbrella, it is what was our previous SMSF quarterly wrap, now changed to the changing face of SMSF. So we'll be looking at the update, the quarterly update around the latest technical and regulatory issues impacting self-managed super funds. For our SMSF Academy members, nothing changes. It is included within your membership. For those that wish to purchase, it is $99, in which you will have access to our training, and that is on Tuesday the 26th of February at 11 a.m. Australian Eastern Daylight Savings Time. So thank you one and all for attending today. We certainly appreciate your attention and the valued feedback that you've provided through the polls and also through the survey, which we do ask you to complete when you've finished. If you'd like to continue in the conversation, we are very active in the social media space, so please feel free to connect with us, in particular through our LinkedIn discussion group, where we will provide some further discussion around these topics. We will provide a podcast without a significant number of questions, and just subject to time, I think we will convert that into a podcast and have that available for all to download. So to Nick and Liz here, we will arrange a time in the very near future to organise that to actually happen. So I guess in closing, again, I hope you found today valuable. It is something that is very much top of mind for the profession. Yes, we are waiting for final regulations, but as we've sort of explained throughout today's webinar, you really need to be on top of these issues and really thinking about these as it is closing quite quickly, and in my view there will be some advantage in taking on an early adopter's position. But the proof will obviously be in the final regulations, which we very much look forward to receiving those. So to my guests today, thank you again for being a part of the webinar, and I look forward to you joining us in the near future. Thank you very much.